to answer all the stock queries, and Hemant Rustagi of Wiseinvest Advisors is our personal finance expert for the day. Good afternoon, gentlemen. Thanks very much for speaking with us. We have a first caller on the line already with us. Preeti Shankar calls in from Mumbai. Hi, Preeti.
Hi.
Hi,
yeah,
what's the question?
I have 200 shares of Reliance Infra, the cost of at the rate of 1265 rupees.
Okay.
So I want to know what should I to do.
Do you mean Reliance Industrial Infra?
No, Reliance Infra.
Okay, Fani, what's your sense?
She has got it at a very elevated price, and despite the recent run-up that one has seen in the stock and generally better sentiment going forward, I see that the price of 1200 will be difficult to retrieve because the price of 1200 was set in a completely different backdrop. The expectations about the company and the economy were very different then. Now, I think with the benefit of hindsight, and since the investors have had some proof of the project management track record of Reliance Infra, I guess going forward, at least in the next 2 years, also considering the order book composition of Reliance Infra and the rate at which new orders are coming in the overall macro, I think the valuations of Reliance Infra are unlikely to be re-rated. Profitability is also unlikely to grow at a level which will justify the price of 1200. So my advice to the investor would be to cut her losses and get out of this sector completely.
All right, then cut your losses seems to be the advice that's coming in. Reliance Infra, back in the day, in fact, the stock used to trade at very, very good prices. The investor Preeti had bought it around 1,300. There were investors at that point of time when the Nifty was at around that 6,300 mark, who had bought it at around 1,800, even 2,000 rupees odd, but not looking too good. Cut your losses is the advice that Fani's bringing to you. But let's go to our next caller. Varsha calls us in Pune. I think she wants to invest around 15,000 rupees and wants advice which stocks would offer value. Varsha?
Actually, sir, I am a new investor.
Okay.
I had a ICICI 100 shares purchased at the rupees 361.
All right, 100 shares you bought at 361. So you just bought these shares maybe, ma'am, around a couple of months ago. 1 month ago.
I'm holding it for a couple of days.
Okay, 361. And any other...
I want to know, sir, where shall I invest for a short-term period now?
All right, so these shares you have of ICICI Bank, you want to hold it for another 6 months, 1 year?
Yeah, 6 months.
6 months you want to, and you want to invest another sum of money in some other shares. Am I getting the point right?
Yeah.
What is the total quantum? 15,000 rupees?
Yeah, 15 to 20,000 rupees.
Superb. All right, Fani, let me come across to you. She's bought ICICI Bank. I think she would have got a bit of a shock, because after she bought it, I think it went down all the way to around 320. Luckily, it's back to 355. That one she wants to hold for around the next 6 months. And she also has another 15 to 20,000 bucks that she wants to invest. Where should she put it?
Well, one thing is that she needs to consider a slightly medium-term horizon. So 6 months is okay, but I would be glad if she could extend her time horizon, especially when dealing with equities. Since she already has some exposure to a large cap private bank, then in order to just diversify her portfolio, I would advise her to look at large cap IT, and within that, Infosys seems a good idea. However, I would warn the investor not to be carried away by even if she decides to invest 20,000, she will get about 10 shares of Infosys. Not to be carried away by a smaller quantity, because usually retail investors pay a lot of attention to quantity. Quantity doesn't matter to your total investment matters. So if she can go with Infosys, it would be an excellent diversification to her portfolio, as well as considering that she has just started out, it would also make a relatively better rounded portfolio for the next 6 months to 1 year.
Okay, Varsha, आपके लिए यही राय है that you have to buy into large cap IT. The stock that Fani has recommended is Infosys, and he's saying that don't go even if you get a smaller number of shares. Given that you're just looking to invest about 15 to 20,000 rupees, don't get dissuaded by that. It's the percentage gain that actually matters and not the number of shares. Up next, another caller on the line with us is Archana, who's joining us from Mumbai. Hi, Archana.
Hi, my question is, can you suggest a scheme in which I can invest in gold or a fund that has a mix of equity and fixed income?
Okay, and how much money are you looking to invest? What's your time horizon?
15 to 20.
15 to 20 years, okay. So long term, and how much money are you looking to put in?
Around 50 plus.
Okay, 50,000 upwards. Hemant, what's your advice to her? She's looking for basically a fund which could replicate a portfolio, so to say. So she wants a bit of exposure to gold, fixed income, as well as equity.
Well, Archana, I would say that since you intend to invest in gold, equity, and debt, there are multi-asset classes fund which are offered by mutual funds. The best thing about these funds is that each of these funds have pre-decided allocation to each of these asset classes. The second important thing is that the fund manager rebalances the portfolio periodically. What rebalance means is that if there is a limit for equity and if it crosses that, it will book profit in equity and bring the money back into other asset classes which may not have done well. In this category, my recommendation to you would be that you can look at Excess Triple Advantage Fund. This fund, rebalances the portfolio on a monthly basis, and also I think if you look at its performance, it has done pretty well. But one thing I would like to add here, you should look at multi-asset classes fund only if you're not an active investor. If you can manage your portfolio actively, if you invest in three asset classes differently, you can actually get better return, and also returns can be tax efficient. Now, for example, this Excess Triple Advantage for tax purposes would be treated as a debt fund, which means you have to hold it for 3 years, even though, it may not be an issue for you because you have a time horizon of 15 years. But you must know the tax consequences of that. After 3 years, it becomes a long-term capital gain. But if you invest 40 or 50% in equity, then after 1 year, it becomes tax-free. So depending on the kind of investor you are, if you're not too sure about how much to allocate to different asset classes and you're not an active investor, go for a multi-asset class fund.
All right, then, that's some valid advice coming in there from Hemant, so I hope you listened in to that. But remember, if you want to catch any of the advice that we've given out in this first segment, you can simply log on to youtube.com/CNBC-TV18. The Nifty is holding well at around that 35 points gain odd. So let's slip in a short break. When you come back, we'll continue focusing on various stocks and also answer your personal finance queries.
Hi, welcome back. Here with your stocks for the market, still holding near 8250 on the Nifty and a gain of about 0.5% on the mid-cap index. Our two experts are still with us. We have Fani Shekhar, who's joining in to answer all our stock queries, and Hemant Rustagi, who is our personal finance expert for the day. Let's get started. We have Tejendra Singh Narula, our next caller, who joins us from Ranchi. Hi, sir. What's your question?
Hello. Hi. Thank you for having me.
Hi.
Hi. I've just recently become a father.
Okay.
And, I want to do everything to protect my child's future. So I was considering child protection fund.
Okay.
I was wondering if you could suggest an amount and possibly what sort of maturity I could expect in about 18 years.
Okay. Hemant is looking for a child protection fund, but since his time horizon is 18 years, would you recommend something which is a little more aggressive for him?
Well, yes, Tajendra, let me begin by saying that, this child plans of insurance company, do allow you to accumulate a corpus and use it in a phased manner. And in fact, people find it very convenient because you combine insurance and investment in one product. But considering your case, you have a time horizon of 18 years. So my advice to you would be that, you separate your investment and insurance needs. Now, for example, in your case, if you buy a term plan for looking at your annual income of 15 lakh, the ballpark figure would be, let's say, around 1.5 crore. You buy a term plan for 1.5 crore, which is quite cheap compared to other, kind of insurance products. And on the investment side, if you invest in well-diversified equity fund over a period of 18 years, I think probably you'll gain both in terms of return that you will get and also in terms of cost that you have to incur over a period of 18 years. So my recommendation would be that you can check these few funds that I'm telling you. HDFC Equity Fund you can look at, Reliance Equity Opportunity is another fund that you can look at, and IDFC Premier Equity. These are three funds, and they'll provide you, a good exposure to three different segments of the market. Now, as far as, the corpus size is concerned, assuming that you need, let's say, 50 lakh rupees for after 18 years from now, assuming an annualized return of, let's say, 12%, you need to invest 7,000 rupees to get to the corpus of 50 lakh if you invest in these. But the key is, of course, to continue this process for 18 years. There will be periods when you will see the market volatility, but don't allow that to come in the way. Continue your process and you can accumulate a good corpus.
All right, Hemant, Mr. Narula, I hope you listened in to that advice. You're investing quite early for your little boy, and I guess if you use all that advice, it's going to hold him in good stead. But let's go to our next caller. Bitin calls us from Mumbai. He has some investments in Ashok Leyland. Hi, Bitin.
Hi, good afternoon.
Good afternoon. How can we help you?
Yeah, I have purchased 187 shares at the rate of 52 around one month back.
Okay.
And I want to keep these shares for long term, say around more than 5 years. So is it feasible, or I have to move any other shares?
All right, good. You've got a good time horizon at least. Funny, what do you think? He's bought this stock that has, I think, tripled in the last year and a half approximately. It was 15-16 bucks, and now it's at around 50 bucks. But he has a broad time horizon, so he's looking to hold it for 5 years. Advisable?
It is. So while he has missed out on a large part of the easy money, but still there is a lot of juice in Ashok Leyland. What is heartening is that he wants to stay invested for the longer time, that is for 5 years. What you are looking at then is the complete journey from the near trough levels that we are right now in to almost the peak, which I think should take about at least 3 years to anywhere between 5 years. So his time horizon seems apt. As and when cyclical, such as Ashok Leyland, which is in the business of commercial vehicles, travels from trough to peak, you would actually see that its sales volumes will at least double. To give you a sense, the sales volumes of Ashok Leyland this year will be lower than what they were 4 years back. That's the kind of latent demand that you are talking about, plus add new demand that will come as and when the economy starts expanding. As the demand grows, there is a huge operating leverage in cyclicals like Ashok Leyland, and the margins will expand. So if the top line doubles, you can easily bet on the bottom line quadrupling. And then that explains why Ashok Leyland is being valued increasingly on sales these days. But even at 52, it's a wonderful price if he is there for the long term. At least expect a level of 65 over the next 1 year, and then we can take it forward. But it's a stock that is worth investing in and staying invested in for the longer time.
All right, that's the advice on Ashok Leyland. Bitin, for you remain invested in Ashok Leyland. That's the advice from Fani. We need to take a quick break, but our two experts, Fani and Hemant, will remain with us, and we'll answer some more queries in just a moment.
Welcome back to your stocks on Cnbc TV 18. Let's pull up the Nifty. It's currently moving towards the high point of the day, holding the gain of around 36, 37 points. And let's pull up a couple of heavyweights. Pull up ICICI Bank as well as HDFC Bank. Both of them, in fact, have moved towards the high point of the day, and that's, in fact, the region which is helping the Nifty pull back. So let's pull up the Bank Nifty. In fact, the Bank Nifty should be showing a good move because ICICI Bank and HDFC Bank, put them together, and in fact they constitute close to around 70% of the Bank Nifty, and that's perfectly replicated in that chart there. The Bank Nifty at the high point of the day, the Nifty as well fairly excited, and other stocks that are moving around are the likes of JSPL, Kane India. Remember, they have been the biggest losers, but in today's trading session, both of them are the biggest gainers. And even NMDC, the stock that corrected all the way from around 200 to around that 120 odd mark just last week, that one has pulled back, currently sitting with a gain of around 3.5% at around 146 rupees approximately. But let's go to our next query that we have. Nihal Raija writes to us from Chennai. He's looking for a good investment plan. He wants to invest around 10,000 rupees. His annual income is around 10 lakh rupees per annum, and he has a long-term time horizon. Hemant, let me come across to you. How could you help him?
Well, I think my advice to begin with for Nihal would be that he must be very sure about his time horizon. Long term can be a little vague term, because long term can be 5 years and can also be 15 years. So I think it's very, very important for him to be very definite about his time horizon. He's also mentioned about that he would like to get some tax benefits. So if he's looking for getting some tax benefit through an investment plan, then my recommendation would be that he can opt for equity-linked savings schemes or mutual fund. Since he wants to invest a lump sum for the current year, only 3 months are left, so he can invest for the current year as a lump sum. A couple of funds that he can consider in this category are Axis Long Term and Reliance tax saver. These are two funds that you can look at. But for next year, my recommendation would be that if you can set up SIP for investing, because at the end of the day, these are two equity-linked products, and there is bound to be some volatility. So I think they need to also look at the right option as well as the right strategy for investing.
All right, and we have time for just one more quick caller. Prashant Kumar Sinha is on the line with us from Siliguri. Hi, Prashant.
Yes, ma'am. Good afternoon.
Good afternoon. What's your question?
I have 3,900 shares of GBK Power at the rate of 10 rupees.
Okay.
So I want to know what I can do, hold or exit.
Okay.
And my time horizon till January.
Okay, so which is not very long. So I don't know if Funny will want to advise you on such shorter duration, but on the stock itself, Funny?
Well, it doesn't inspire any investment confidence at least, but shorter time duration charts are the best indicator. But from a purely investment point of view, it is not at all a long-term call.
All right, that's the advice for you, Prashant. As a trader, you might look at it, but then a technical analyst would be best advised to placed to tell you what this advice is. But on a long term, in the long term, this is not the best of stocks that you might want to stick on to. Yes, Nigel.
No, sir, I was just looking at a few stocks that have started moving around in the last few minutes. So you pull up something like an Allahabad Bank. In fact, that one has spiked up. Even something like a GMR Infra, that stock as well is moving higher with a good amount of momentum. And Arvind, the other outperformer this year, that stock as well has seen a bit of a spike up, and that's why the mid-cap index as well is holding with a gain of close to around 0.5%. Or just pull up some of these frontliners as well. You pull up something like a TCS and Kotak Mahindra Bank as well. Both of them have joined the party. They're up roughly around 0.5% just in the last 5 to 10 minutes.
All right, Fani, what are your disclosures?
Well, of all the stocks disclosed, I do not have any personal positions. However, a few stocks such as Infosys are being held by us in our portfolios.
All right, Fani, Hemant, thank you very much, gentlemen, for joining us this afternoon. We'll wrap up on your stocks, but do stay tuned. Closing bell is up in just a bit.